Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate news. Today we're diving into the financial statements of iShares Trust. Don't worry, we'll make it exciting, or at least as exciting as mutual fund reports can get. What's the story? iShares, like other investment companies, has to tell shareholders how their funds are doing, what the fund invested in, and what returns it got. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join to share your ideas and learn some investing. Scroll Codified Exchange Report of Data Management Investment Company Scroll. This document is called Form N-CSR, and it's basically iShares' way of keeping you, the shareholder, in the loop. Think of it as a report card. We look at Fires Trust, an investment company that files this report with the SEC. It includes updates on several iShares funds like the iShares Morningstar Growth ETF. Scrolly registrant's telephone number, including area code 4115 Team C 6722 sound scroll file. We'll see how they performed, what they invested in, and any interesting changes happening behind the scenes. The fiscal year in question ends April 30th, 2020-2025, so we are looking ahead a bit. Scroll the reports to shareholders are attached herewith. Scroll the filing includes reports to shareholders, and they're attached to the document. So what funds are we looking at today? First up is the iShares Morningstar Growth ETF, ticker symbol ILCG. This fund focuses on US companies with above average growth potential. Let's see how it's doing. First, the cost. The report says that for every $10,000 invested, there was a cost of $4. That translates to 0.04% of its net asset value. Basically, it's dirt cheap. Now for the good stuff performance. The fund returned almost 15%, which is excellent. Let's see what kind of companies are making that return. The fund is mostly invested in information technology sector. About 42% of all investment is allocated to it. Taftai as examples, Microsoft and Nvidia. So the fund is riding their AI boom. Next up, the iShares Morningstar Midcap ETF, ticker symbol MCB. This fund focuses on mid-sized US companies which give it higher volatility than large ones but also more opportunities. What do its financials look like? For every $10,000 you invest, it reports only 4% very efficient, our 0.04% very efficient. The fund returns 7.2%, which is less than the growth ETF but acceptable. But what constitutes this value? The fund has a lot of holdings in the information tech sector, but also industrials and financial, all around 15%. Moving on, there's the iShares Morningstar Mid-Cap Growth ETF, IMCG. This ETF focuses on the mid-sized companies with growth characteristics. You know, those companies that are not big names, but have serious growth potential. It also lists the fees. You pay $6 for every $10,000 invested, which is around 0.06% net asset value, similar to the previous fees. What's the investment breakdown? The top sectors are industries, 22%, followed close by information technology sector at 21%, financials at 13%, followed by consumer discretion, also at 13%. But what's its success? It's better than the non-growth counterpart at approximately 9%, but still acceptable. Daxtable, that after the iShares Tapiunoim Star Small Cap Growth ETF with ticker ICG. This focuses on small US companies projected to grow a lot. The report claims low fees of around 6%, so very little loss as far as that is concerned. Its annual return is 3.57%, but its benchmark Morningstar Small Cap Growth, 3.52%. Not bad. It appears that it follows its benchmarks well. Also, what company is making all of this money? You might find it interesting that the biggest sector is industrials, followed by healthcare and information technology. You might also like learning that among top 10, this index has Tapestry at 0.7%. Bet you didn't expect that. All right, last but not least, for the Morningstar branch, let's look at iShares Morningstar Small Cap Value ETF with ticker ICV. This aims to invest in small cap companies seen as undervalued by the market. Let's see how this looks. It mentions management can cost you about $6 yearly with fees around 0.6%, cheap as it can be without being free. But what if that value fails? Did the fund make money or lose money? It claims a return of just 1.28%, so it followed its benchmarks with only a bit of profit. It means it has value stocks that underperformed most growth market indexes. It's mostly financials, construction, and real estate areas that are usually slower and much less profiting than what we mentioned previously. It looks like it's buying low, expecting it will surge much more in the future. Only time will tell, and it will depend on the market. Extrovian Share Select US REIT.